Ever wonder where money really comes from? It's a story that involves secret meetings, powerful bankers, and a clandestine train ride to a private island. This isn't a spy novel. This is the real story of how the Federal Reserve was born. Picture this. November 1910, a group of the world's most powerful men, representing about a quarter of the world's wealth at the time, board a private train car in the dead of night. Their destination, a secluded spot off the coast of Georgia known as Jekyll Island. Their mission was top secret. They traveled under aliases, telling their families they were going on a duck hunting trip. Even the train staff was kept in the dark. The men were instructed to use only their first names to prevent anyone from discovering their true identities. Why all the secrecy? Because they were about to draft a plan that would fundamentally change America's financial system forever. Who were these mysterious figures? The group was led by Senator Nelson Aldrich, a powerful Republican with deep ties to the banking elite. His daughter was even married to John D. Rockefeller Jr. Alongside him was A. Piatt Andrew, the Assistant Secretary of the Treasury, and some of the biggest names in finance: Frank Vanderlip, President of National City Bank of New York; Henry Davison, a senior partner at J.P. Morgan and Company; Charles D. Norton, President of the First National Bank of New York; and Benjamin Strong, another key figure from J.P. Morgan's empire. Last but not least, there was Paul Warburg, a German-born banker from the firm Kuhn, Loeb & Co., who was widely considered the intellectual architect of the plan. These men weren't just going on a vacation. They were responding to a crisis. The early 20th century was plagued by financial panics. The Panic of 1907 was particularly brutal. It started with a failed attempt to corner the market on United Copper Company stock and quickly spiraled into a full-blown crisis. People rushed to withdraw their money, banks failed, and the stock market crashed by nearly 50%. The country was on the brink of economic collapse. The only thing that saved the day was the private intervention of J.P. Morgan himself. He personally organized a bailout, locking bankers in his library until they agreed to pool their resources and prop up the failing system. While he was hailed as a hero, the crisis exposed a huge vulnerability. The U.S. economy was entirely dependent on the whims and resources of a few wealthy individuals. There was no central authority to manage the money supply or act as a lender of last resort. The public was outraged. There was a growing distrust of the money trust, the powerful Wall Street bankers who seemed to control the nation's finances. People demanded reform. In response, Congress created the National Monetary Commission, chaired by none other than Senator Aldrich, to study the problem and propose a solution. This is where the secret Jekyll Island meeting comes in. After spending 2 years studying European central banks, Aldrich knew that any plan openly associated with Wall Street would be dead on arrival. The public would never accept a banking reform bill written by the very bankers they distrusted. So, he orchestrated the clandestine gathering. For 9 days, these financial titans hammered out the details of a new central banking system. They argued, debated, and compromised, working late into the night. Paul Warburg, with his extensive knowledge of European models, laid out the framework. They designed a system that would appear decentralized, with regional reserve banks, to avoid the public's fear of a single, powerful central bank in New York or Washington. However, the structure was clever. While it had a public face the board of governors appointed by the president, the real power would lie with the regional banks, which were to be owned and operated by the private commercial banks in their districts. In essence, it was a system designed by bankers for bankers, but presented as a public institution. The plan they created on Jekyll Island became known as the Aldrich Plan. As predicted, when Senator Aldrich presented it to Congress in 1912, it was met with fierce opposition. Democrats, in particular, denounced it as a scheme to give Wall Street even more power. The plan was soundly defeated, but the story doesn't end there. The idea of a central bank didn't die. In the 1912 presidential election, Woodrow Wilson, a Democrat, won the presidency. The bankers who had met on Jekyll Island saw a new opportunity. They needed a new frontman, a new name for their plan. They found their champion in Congressman Carter Glass of Virginia. The Aldrich Plan was subtly repackaged, given a new name, the Federal Reserve Act, and promoted as a way to break the grip of the Wall Street Money Trust. It was a brilliant marketing move. Many of the key features from the original Jekyll Island blueprint remained, but they were now presented under a progressive, democratic banner. The timing was perfect, taking advantage of the Christmas holiday when many members of Congress had gone home. The proponents of the bill pushed it through for a vote. On December 23, 1913, President Woodrow Wilson signed the Federal Reserve Act into law. It was a momentous occasion. A system conceived in secret by a handful of powerful financiers was now the law of the land. The United States finally had a central bank. The Federal Reserve was given the power to issue currency. The Federal Reserve notes we use every day, control interest rates, and regulate the banking system. Years later, several participants of the secret meeting would admit to their roles. Frank Vanderlip wrote in his autobiography, "I was as secretive indeed, as furtive as any conspirator. If it were to be exposed that our particular group had got together and written a banking bill, that bill would have no chance whatever of passage by Congress. The creation of the Federal Reserve is a fascinating and complex story. It highlights the immense power that private interests can wield in shaping public policy. It's a tale of crisis, conspiracy, and political maneuvering that resulted in the most powerful financial institution in the world. So, the next time you look at a dollar bill, remember its origins. It wasn't just printed by the government. It was born from a secret meeting on a private island, a plan to stabilize a volatile economy that also cemented the power of the very bankers who designed it. The debate over whether the Fed is a public servant or a tool of private banks continues to this day, and it all started with a secret train ride to Jekyll Island. Thanks for watching. If you found this story as fascinating as I do, make sure to like this video, subscribe to the channel, and hit that notification bell so you don't miss our next deep dive into the hidden histories that shape our world. See you next time.